take no loss. I don't even know what it costs. I hit the ground and it go off. Yeah, hit the ground and it go off. Yeah, I can't take no loss. I don't even know what it costs. Yeah, I hit the ground and it go off. Yeah, hit the ground and it go off. Yeah, run it. Ooh, I really feel it's my time. Think it's my year. Yeah.
Good morning, everybody. Welcome to the morning show. This is Stock Market TV. I'm Spencer. We got JC. We got Steve. We got Alfonso with you as we are every single morning. On the show today, we do have quite a bit of earnings to discuss. We will probably talk about Bitcoin above 70K. Yes, Ravi in the chat noticed that as well. We'll have Ari Wald stop by. He's a fan favorite, one of our favorites, and he joins us like once a month. So it's always good to talk to Ari. We'll have Patrick Donawilla on the show, talk about some of his favorite charts from the weekly top 10 report that he sends out every single week. And we'll see where that gets us. How about that? Does that sound like a plan? Sounds like a plan to me, all right? Let's do it. Smash the like. Here we go.
All right, ladies and gentlemen, we are back.
Mm-hmm.
We have a lot going on, my friend. Are you noticing? Are you seeing? You know, how often does Spencer Israel start a morning conversation with, is Bitcoin above 70? I would say not often, Spencer Israel.
Well, how often is Bitcoin above 70?
Not often enough. Is really the answer.
Okay, then.
You know, for those of us that have positions, some larger than others, depending on where we are in the cycle, this BTC is making some serious moves. We also have big earnings. We got Amazon on Thursday. We got Apple on Thursday. I mean, we are not messing around. You notice?
No, this is the week, right? Amazon. Well, it's not even just Amazon and Apple. Like that's Thursday, yeah. But we got tonight. We got AMD. We got Alphabet. We want to pull up the calendar fonts. We got Snapchat tonight. I don't know if Snapchat rises to the occasion. Alphabet tonight. AMD tonight. Microsoft, Meta tomorrow. This is it. This is big tech earnings week. We are in it. So enjoy it while it lasts, everyone. I know I am.
What do you say we get into a little state of the markets?
Yeah, sure. Yeah, we can do that.
Please. All right, ladies and gentlemen, we've got the Dow futures down about 1/3%. It's 150 points to the downside, 42,450. S&P 500 futures down 9 handles, pretty much flat, 58.50. We got the NASDAQ 100 futures are flat, 20,500. And 30-year bond futures are down about 0.5%, down to 117. That bond sell-off continues. Crude oil bouncing back after a bloodbath yesterday, up 1.5%, back up just under 69. Copper up 1/3%, 438. Gold up 0.25%, 27.60. You got silver up 1% this morning, 34.35 for silver, with the volatility index above 20. Above 20. You got the S&P 500, you got the Dow Jones Industrial Average, you got the NASDAQ 100 within a nose hair of new all-time highs. You got the bulls are fleeing. We just got the individual investors data. The bulls are running. I mean, bulls are scared to death. Volatility index above 20 with the market at new all-time highs. Very, very interesting. Over in funny money, Bitcoin, ladies and gentlemen, up another 2% this morning, above 71,000. Spencer Israel, not just 70. Ethereum, 26.25, up 2.25% this morning. Quite the laggard there in Ethereum. Solana, on the other hand, up 1%, right around 180 this morning. Binance back above 600, up almost 1% today. Total crypto market cap, Spencer Israel keeps inching higher, $2.35 trillion with the Bitcoin dominance pushing 60%.
Okay.
Ladies and gentlemen, how do we feel about this morning's futures?
We feel good. I want to hear more about the bulls being scared, though. That's what I want to hear more about.
Yeah, so just to give you some stats, the American Association of Individual Investors polls individual investors.
Anyone can do it. I've done it before.
Yeah, full disclosure, it's like 300 Republicans in the Midwest. Just just so like if you're wondering who these people are, that's basically what it is. For better or for worse. Nevertheless, the American Association of Individual Investors historically is the most erratic of the polls, the one that moves the fastest. The other ones are a little bit slower, so just keep that in mind. And then so we just got this data, and with the S&P 500, the NASDAQ, the Dow, we just saw one of the largest drops in the AAII bulls that we've seen all year. We now have the fewest number of bulls among individual investors since May, which, if you recall, was just before a historic 6-week rally in stocks. Mr. Strazza, what are these 300 Republicans from the Midwest so scared about?
I don't think about these polls too much. You know that, especially not in the middle of cycles.
S&P within 1%, and the bulls running for the fences, disappearing, being scared with the VIX at 20. So it's not like, hold on, Strazza, I know that you're not like Mr. Poll guy, and I respect that. I'm not really Mr.
Bulls
Poll
haven't
guy either.
disappeared because of something AAII saying, right? The bulls are here. The bulls are out here. I see.
Why is the volatility index above 20?
That's awesome. We also have an election next week, so I get it.
So you think that that's what it is? Okay, so that's my question. What are people so scared about? Why is volatility so elevated despite the stock market at all-time highs? Why are we seeing the fewest number of bulls amongst individual investors since May? You're saying because there's a U.S. election next week. That's your guess.
It would have to be, right? Like I think we'll get through the election just fine, but there could be some knee-jerk stuff going on. I would almost be surprised if there's not. You're going to get a big volatility day.
You think so?
Maybe the day before, maybe the day of, maybe it's the day after. But
yeah, I don't think so. I said it yesterday. I think it's a non-event. I think it's a non-event. I think volatility disappears. I think volatility gets compressed. I think it's a non-event.
First of all, volatility gets compressed after every election or every event, so that will happen. I'm positive that will happen.
Does it? So the VIX falls after every election. We have that data.
Yeah, volatility comes down. So, like, we were talking about this with our call options yesterday. Like, volatility will get crushed after the election, I would think. It'll be treated like an earnings event. But this is a presidential election. How could you not anticipate some volatility? You know what happened the last 2 cycles?
Yeah, I was there.
So why are you surprised here that the market is pricing in elevated or increasing volatility?
Why am I surprised that the market is pricing in increased volatility? Because the stock market is at all-time highs.
I mean, we were having a nice run in 2016 and 2020 before the elections too.
In 2020, maybe. 2016, not quite. Things really got going after that. Yeah, I don't know, Strazza. I don't think it's quite that simple. Maybe you're right. I mean, maybe I'm overthinking this.
Yeah,
maybe,
and you're so wrong, because 2016 we were trading at all-time highs. The market had been going up all year. Okay. 2020 we were also trading at all-time highs. The market had literally been going up nonstop all year. So this situation is not much different. We had some wild volatility those 2 times. Market's pricing in something similar again. If anything, maybe you get a nothing burger. Volatility comes out. We skyrocket a lot of these consolidations. Get some really nice decisive breakouts and follow-through moves on the election. I think we're set up for a ripper.
Yeah, I mean, I like I said, I think so too. I mean, I think the market is already priced in a Trump victory by a long shot. I got called out yesterday saying, JC, well, I agree when you say that Trump is going to win by a landslide, that's where I get the pushback. And my argument was that someone who's data driven, I see the betting odds of all the swing states, and Trump's got them all.
They're all red.
So
Yep.
if I'm trusting the data, which I'm a data guy, then that's why I use the word landslide. Maybe it will, maybe it won't. I think a Harris victory crashes the markets. Bitcoin's down 6,000 points overnight. Banks are down 10%. Dow's down 2,000 points. I think the market is pricing in that obvious of a clear victory from Trump. Maybe I'm wrong, right? It all comes back to how it affects markets, right? And we've gotten such great feedback, by the way, Strazza. You've gotten great feedback. I've gotten great feedback that, we keep this show apolitical.
Yeah.
We're just trying to make money from the whole thing. You could like the orange man. You could like the daughter of a Marxist. Whoever you like, it doesn't matter. We're just here to make money from the whole thing. And that also pisses people off. They're like, JC, we care about other things other than money. Well, then you go care about those things. But when it comes to portfolio decisions, we don't care about any of those things. Elon, manipulation, orange man, Hitler, orange Hitler or whatever, and then the Kamala and the communism. Like, when it comes to portfolio decisions, we don't care about any of those things. In fact, we laugh at those people who do allow such things to impact their decision making. We call those people dumb.
Listen, well, it's obviously it's a U.S. presidential election, so we're going to entertain it. Right? We're not going to completely ignore it like it's not, barreling right at us next week. But at the same time, we're not going to overthink it because we really don't care about it. I think we've done a masterful job. I really do, navigating these topics and talking politics or not talking politics.
Yeah.
So,
we know. Marxist Jr. That's funny.
And JC, to say that we don't think we have an opinion on it, right? So you're sitting here saying if she wins, banks are probably crushed. We're thinking through things like, could this be a sell the news kind of event at this point? If Trump wins, I think it's pretty obvious to probably a lot of market participants that he is going to win. They're making those moves before the election, right? Do you get some sort of an unwind after it? So we do think about it in that context and all these things. What we're not going to do is put together some 10-page report and say, these are Trump stocks. They'll do good under Trump presidency, right? Or these are Kamala stocks. That's really not what you want to do based on, what party wins or who's in office. We talked about it yesterday. We talk about it all the time. There's always going to be something more important going on that's driving the price action, not your president. People don't like that either. They want to think like the president's so important. Go listen to Jerome Powell's speeches. Jerome Powell's incredibly important.
Yeah, we have the data. We know that it's actually the Congress that's more important. It's the Republican Congress that the market likes the most, not the president situation, number one. Number two, just to be clear, both Strazza and I have personal lives. We have our interests and our families, and there are way more important things for both of us than money. Fact. And if you know Strazza, you know that he likes things like fishing and golf and caviar and champagne and dinners with JC, right?
But I do love money.
Yes, indeed. But this conversation, this show is about money, right? So if it's Sunday afternoon, the conversation might be about football. But today and every morning, it's only about money. And that's what's most important here. So deal with it. Speaking of making money, can we talk about the Bitcoin, please? Can we?
Before we do, we're
talking about the orange man. Can we talk about the orange token?
I don't think we've pissed enough people off this election season. I just want to say 2 years ago, it was all the news. Spencer, get on here. You should discuss this with us, I think. Elon Musk overpaid $44 billion for Twitter. How could he pay so much for something so worthless? Who is laughing now?
Strazza pings me yesterday, and he's like, wow. He tells me exactly what he's saying now. And maybe I'm ignorant or something. I'm not sure. But so tell me why Elon is the man and why he's laughing.
Go on Twitter. He's controlling the narrative about Tesla, about crypto, about weird shit that I don't care about, and definitely about the election. Where are people finally going before any other place to get their election news? And it's not because Twitter got better at covering the election. They actually got worse. But everybody else got so much worse, so much faster. Twitter has really risen to the top, and he actually ended up paying a very, very small fortune relative to his wealth for basically what I would say at this point the best seat in the White House, it's hard to put a price tag on that. All of his businesses get hooked up now for the next 4 years. He's running some Doge office or whatever it is. He's probably not going to get a position because he's not going to want to divest or put his stuff into a trust. But he basically has whatever position he wants, is the way I see it.
All right, so here
That's why
I am not.
That's why billionaires do the things that they do. I think it just, again, this is like, wow, look at what Elon did once again.
Hold on. So this
He's
is a
winning.
situation where this particular institution is a client of ours. We are not a client of theirs. So I don't know what's in this list. But if you were to throw up slide 2, please, Mr. Spencer Israel. This is from a one Goldman Sachs, who has the Kamala portfolio versus the Trump portfolio. So these are theoretically the stocks, and this is pre-election. Post-election, we don't care. But pre-election, these are the stocks that should do well under Trump and the stocks that should do well under Harris. And you're seeing that over the last month, as the betting odds have given Trump the victory by a landslide, you are also seeing the stocks in the Trump portfolio dramatically outperforming the Harris portfolio, which has completely fallen apart, like she has in the betting odds. Now, here's the problem. I don't know what stocks are in these indexes because we are not privy to that information. Do you?
This is kind of not useful.
Yeah, what stocks?
Is this not useful? I think it is. Tell me, Spencer Israel, Mr. Genius, tell me why this is not useful.
Well, we could have done this exercise 4 years ago, and you could have said, coal stocks are in the Trump portfolio. And I get that you're looking at pre-election performance.
I was going to say, Spencer, are you not listening to the words that are coming out of my mouth?
You're looking at pre-election.
Talking pre-election, what the market is pricing in going into the election. I understand what coal stocks did and what solar stocks did after. I don't care about those things. Pre-election, do you think, Spencer Israel, who finds this information useless, do you think that it's just a coincidence then that with Trump winning by a landslide in the betting odds and the Trump portfolio ripping simultaneously, you're telling me that's just a coincidence?
I don't know. I don't know.
So how about Harris in the betting odds completely falling apart, and then the Harris portfolio also rolling over simultaneously? Is that a coincidence also?
It's somewhat hard to pass judgment on this.
Stop. There's been
how convenient for you, Spencer. How about you, Mr. Strazza? Strazza's ball buster number one over here. Tell me why this is useless and I'm dumb.
Spencer's right. Listen, charts can tell stories, right? I can tell a story of how Republican stocks do well under Republicans. I can also tell a story of how Republican stocks do the worst under Republicans, and the Democratic ones have done the best, right? Like we can do this either way. We could tell a story either way.
We're talking pre-election. Right, am I talking to the wall here?
There's been some very clear and obvious pricing in of a Trump victory. Go listen to Stanley Druckenmiller's interview on Bloomberg yesterday. If you don't believe me, listen to Druckenmiller. He's saying the same exact thing. Look at the banks. That's Trump, right? There are some groups.
And is Bitcoin Trump? Yeah, right.
I think so. Easily. I don't even think it's close.
Throw it up. Throw up the Bitcoin, please. Finally. I mean, we're 19 minutes into the show. We haven't even brought up Bitcoin once. That's un-American.
Everything can be a Trump or a Harris asset.
It can't be. Cannot.
The prisons are Trump, right?
Geo.
Is the prisons Trump or Harris?
The prisons are supposed to be Republican.
Not everything can be a politically aligned asset.
Agreed.
Okay.
There's like a handful in each, right?
And Geo's up 30% over the past couple of weeks. So look, they're all priced in a Trumper. And Josh is right. The Democrats had Elon Musk. They didn't want him. They were like, "Get out of here, kid. We don't want you." Like he was like a sad dog running over to the Republicans.
Well, to be fair, the Democrats have pissed off a lot of people, and a lot of people have left, not just Elon.
Really dropped the ball on that one.
Elon's just the most popular one because he's the richest man in the world. So probably not a good one to lose.
Not a good one.
So tell me,
Elon,
is this it? We've been asking when moon for years. Is this it?
Oh, dude, come on. I'm done at 9:30 today.
Is this it?
Yeah.
I can't take it anymore either.
It's so good. What can you take? This is fantastic. Everybody's happy about it. We're gonna
go to slide 5, Spencer, please.
Hold on,
Yeah.
I have an announcement. All crypto crazies, we're throwing a party on Twitter Spaces today, 11 o'clock Eastern time. Everybody will be there. It's going to be the best Twitter crypto party you've ever been to on Spaces. Don't miss it. 11 o'clock. JC, you should
It's a
really
crypto party.
put on your bull market shirts and join us on Twitter Spaces at 11 o'clock Eastern time.
Crypto party on a Tuesday at 11 in the morning. That's not frothy.
No, we'll have some
Can
friends there.
we,
Yeah, we'll have a surprise. Yeah.
Can you throw up the, please? Okay.
Woo! Oh,
So-
is this one of those, like, if that one did that, why wouldn't these ones do the same? Is that what you're doing here?
This is one of those. So Bitcoin is the 8th member of the Mag 8. Is that right, Strazza?
I
What?
like that take. Yes.
You like that take? 8th member of the Mag 8. So I want to point everybody to the prior cycles peak. This is late 21, early 22. You know, the indexes peaked. A lot of stocks had already peaked earlier that year, but in terms of these big guys, they peaked at the end of 21. Bitcoin, Amazon, Apple, others too. In this particular case, we've got Apple and Amazon both reporting on Thursday. Spencer, if you want to drop a link in the chat, we don't expect people to randomly listen to conference calls without having a pro there giving you the play-by-play and the color commentary. We will have Jeff Mackey,
I got you.
the king of retail, literally the son of the guy who built Target, chiming in and informing us on what's going on. If you're listening to corporate conference calls without Jeff Mackey, that's like, you know, what are you doing? Be there with the pros. And then, so if Apple already exceeded those highs and has been making new all-time highs, Amazon's at those levels, Bitcoin's at those levels. Mr. Strazza, do you believe in your heart and in your brain that Apple making new all-time highs is setting the precedent for Amazon and Bitcoin to do the same?
Yes, I do. Yep. Yes is my answer to that.
So for Halloween, I was the Scarecrow, and the twins were the Tin Man and the Lion.
Oh.
It was fantastic. One of them needed a heart. One of them needed courage. I needed a brain, right? So I would put, you know, as investors, we need those things too. We want to think with our hearts. We want to think with our brains. We want to have the courage to execute. There were a lot of metaphors there in the Wizard of Oz situation we had going on this weekend.
Was Dorothy a traitor the whole time?
We didn't have a Dorothy. My daughter refused to be Dorothy. She wanted to be the Good Witch. So we actually did not have a Dorothy. We had the Lion, the Tin Man, the Scarecrow, the Good Witch, and my wife was the Bad Witch, the Wicked Witch of the West. And we did not have a Dorothy. The 4-year-old is a stubborn one. I'll tell you that, Spencer.
Yeah, she didn't want to be Dorothy.
I'm like, how are you not Dorothy? Because I like Glenda's dress. She has like a big pink dress. Whatever. Mary understood. I still don't understand, but so the answer is yes, Mr. Strazza?
Yeah, earnings will probably be the catalyst to break this out.
So a gap and go, you think, for Amazon?
Listen, these stocks at this point, you know, you get 5% gap on earnings. That's great. They're not what they used to be, and that's fine. But yeah, I mean, I don't think you're going to get fireworks on Amazon's chart at this point, but a nice orderly uptrend, targets being hit.
They're not what they used to be in what sense?
Volatility wise, Spencer.
Spencer,
Okay.
can
Here
you
for the
throw,
beta in a bull
throw
market.
the link in the chat for Thursday so people
I
can join
did.
us?
Yep,
I want my stocks to do a PayPal after they report earnings. You see this crazy thing? Down 15%, right back to where it came.
Yeah.
Yeah, I want some
Damn it.
moves here, you know? Ask Kenny what I'm talking about. We need some action on these streets.
All right. Is Kenny here? Or we got time for one more chart?
I would love to talk about earnings with these digital payment stocks.
Spencer, is
All right.
Kenny here? We got time for one more chart. Oh, I guess we have time for one more chart. I do wanted to mention, while Spencer pulls up the chart, I do want to mention I got my daughter to eat the fatty part of the ribeye for the first time last night.
I loved that tweet. That was a great tweet.
I've been working on this for years. I'm like, eat this part, eat this part. No. And then
going back. Yeah.
she's been on quite the bacon kick lately.
Yeah.
So you know what I did? I said, This is the bacon of the cow.
That's it. Boom. Bang. Nice. Good move.
And that did it right there.
Mark
She's
that.
like, Psh,
Mark
cows
that.
have bacon? No, kind of, right?
I was a late convert to the ribeye, but I get it.
I know this filet stuff you eat is disgusting, dude.
Still love a good filet.
No, but yeah, isn't that great, dude? Because she's been on Sirius and she knows that the bacon comes from the pig's belly and all that stuff. And then yesterday, for some reason, it just hit me. I'm like, hey, do you want to try the bacon of the cow? And she's like, yeah. And that's it. She just refused to eat the lean part now. She's like, Daddy, can I have more of the white part, please?
Getting on
My wife was, I don't know if she's impressed or appalled. I don't even know.
Morgan, what does Morgan think about your obsession with fatty meats?
It works out great in our family because I cut the lean parts for her and I save the best parts for me. And I used to feel bad about it. I'm like, are you sure you don't want any of this? So now it's me and the daughter and we just crush.
Everybody's happy.
Yeah.
All right, my computer just had a seizure, but I think I'm back. Should we bring on Kenny?
Yeah.
That's right.
All right.
It's that time. Yeah.
It's been a long time coming. They ain't come from my club, they tug it. Putting up numbers, 99 problems, and I still kept it 100. Hola. Yeah.
Ooh, Kenny Glick in the house.
Yo, what up?
You know how I know it's not frothy? I know it's not frothy because Jeez Louise, what was that?
It was me on you. I don't know where that's coming from. I don't even know where that's coming from.
Mic check. 1, 2. Mic check. You know how I know we're not frothy is we haven't had a dance party in like a week. We got to bring that back, Kenny. We got so much great feedback from our dance party the other day. Right? Remember?
I got good tracks. I have stuff that I still have to get off my cassette. Does anybody have a good cassette player to transfer like old school cassettes to like digital? Because I haven't found one that worked well. It worked for like 20 minutes and then it just stopped working. I don't know what that's.
That's a good question. I don't know the answer to that. But yeah. I appreciate what you're doing there. I still
actually have my mixtapes. No, they're not here. No, yeah, I put them in the basement. Yeah.
Mr. Kenny Glick. So I'm seeing the stock market across the board right near new all-time highs. Cryptocurrencies continue to act well. Further evidence of risk appetite. But I'm seeing the VIX above 20. I'm seeing the individual investors fewest bulls since May. People are scared out there. Strazza tells me it's because there's an election next week. I don't know if I buy that, but all right, we'll give it to them. How are you approaching this market with all of those things in mind?
You know, I was talking with Mr. Bishop the other day, and he said, Ken, the one good thing about you never change. I'm like, yeah. Not only do I not change in my approach to the market, I eat the same stuff, I drink the same stuff. I'm pretty bland. I'm kind of robotic, which is kind of, how to trade the market. It is the same day every day to me. So it doesn't matter what's coming next. It's what just happened. And again, it's all about PayPal today and McDonald's. And you just stay focused on what the plays of the day are. And, PayPal's already given us 3 opportunities to pay for the trade that we did last night. So let me explain. I bought PayPal a couple of weeks ago because it was coming out of the Andy Dufresne. I was a little bit late there, but we bought it, high, mid 70s. And we've been in it ever since. The stock was, got into the 80s and then it just hit a brick wall. But intraday, it's been fantastic because it's still under accumulation. The dips are being bought. Fast forward 3 weeks later, we were still in the stock. So yesterday we sold the stock because earnings are coming out this morning. I don't like to be involved in the stock. So not to be left out of the party in case it does gap and go. And I heard you mention the gap and go, the elusive gap and go. It's not too often you see numbers that are so good. And about 6 months ago, you were seeing this because we were still breaking out, gapping up on earnings and then going without the retrace. This chart is what I like to see. Report the earnings and dump. So then I could buy the dip. And where do we buy dips? VWAP breaks on earnings reports. So what we bought yesterday was an 83.93 call spread for Friday. So we paid
83.93 call spread. Explain what that means.
Right. So we bought the 83 calls for roughly anywhere between $3 and $4. So let's say our cost average is $3.50. Gives us an 86.5 cost
and then
average.
Sold.
Yeah, and then we sold some $97 calls just to offset the cost of the 83s.
And how often are you putting on a bull call spread versus just owning the common? And what makes you do that versus the common, out of curiosity?
Well, it's very, very rare, and I'm kind of going to explain why it's probably not going to be a winning trade by Friday. Again, if we go to 86, 87 on PayPal, it'll be fine. But normally, I like doing the call spread because I don't think we were going to go to 97 on a PayPal, but I'll take in some premium just to offset a trade that doesn't normally work, like betting against the Jets and the Giants, which, hey, now, Pittsburgh -6. I waited all week for that trade. Oh, that trade. It's all the same to me. But yeah, generally, I'm assuming it's not going to work because buying options before earnings reports is one of the least productive trades you'll ever do because you're overpaying for an option and you're guessing what the stock's going to do. So those same options that we bought yesterday for $3 and $3.50 and $4 are going to be 20 or 30 cents this morning. So now if the stock rebounds, which so far so good. I mean, we've had 3 reversals already. So the first plummet, not shorting it because that just happened too fast. But then here comes the rebound. So I'm a VWAP trader breaking $80 over the VWAP back to the orange. That just paid for the options trade that we're probably going to lose on. And then here I am thinking maybe this option play is going to work. And then it rolls over. And not only am I not, in this trade anymore, I was thinking about getting short against the option play that I have to hedge myself, but I was still a little bullish. So consolidation. Next thing you know, we're back in the PayPal long, gets over the VWAP. And now the bastards that they did, I had my finger on the trigger right here at 80.5, which was the VWAP. That's me, my friends. Trading's hard sometimes. It just gets you out. I had my discipline. I said, I don't want to see it break in the half. And if it breaks the VWAP, I'm going to sell what I had left. I only had about 100 shares left. So that's me selling it. And then it rallied 3 points. Well done, Kenny. But that's what trading's all about. But if you're sitting there and you're from the original lot and your risk tolerance is a little bit greater because you have a good entry, this was just a jiggle. And now we're basically right where this stock needs to make a new decision. We're between the 1 minute and prior day VWAP. If it consolidates anywhere above 81 and we break the pre-market highs, that option play might be really good. So I'm looking, again, I'm sticking with the PayPal. And again, McDonald's is the same type of setup. We know about the E. coli, and now they have earnings. So E. coli and earnings, the stock got hammered. And again, I wish I was sitting here about 4 minutes ago because this was a nice little setup. When something butts against the VWAP and doesn't break, that next break is usually the go-go move. And right there, that was a 3-pointer right there. So you're buying a couple of 100 shares of McDonald's, and there's your 3 points, and then it gives it all back, obviously. But volatility is here, PayPal, McDonald's, and pretty much what I'm going to stick to all day.
What else is on the move this morning? Is this Spencer Israel? Is this the heart of earnings season, or does that actually get going on Thursday?
Oh, no,
How do you feel about that?
We're in the heart. This is it, Kenny.
This is
right?
the heart.
Oh, we in the heart now.
Yeah, I'll give you another one.
Heart.
I'll give you another one. It's my old friend Rambus, and again, this stock is why owning stocks and me.
No one ever.
Again, I love the
friend
Qs.
Rambus.
Obviously, the Glick family's been long the Qs since 2003, since the birth of my first son. And you can't go wrong with the Qs. But this is typically my life of a stock ownership. So I buy it coming out of the Andy Dufresne. And by the way, the Rambus trade was one of the biggest Andy Dufresne's. It was a 20-year. It was the true original Andy Dufresne trade. Look at this thing. This is a monthly chart going back 20 years of Rambus. And you guys remember, if you've been trading long as I have, Rambus was the shiznit for a while. That was it.
Rambus was the NVIDIA of its day.
Yes.
It was the Tesla of its day. It
Yes.
was, right? Am I wrong?
Absolutely. And me and Big Al, which is my dad, we owned this stock for roughly 7 years, watching it do nothing. And we finally sold it, and it spent another 3 years doing nothing. But then it came out of the Andy Dufresne around $14, and it went to 80. I got involved on one of the biggest Kardashian bottoms I had seen, a 20-year. So basically Andy Dufresne meets Kardashian. We started buying it at down $37. But fast forward 2 years later, I'm still in from $37.50. The stock went to 80. I'm thinking, here we go to 120 at least. And I'm still in the same lot that I bought from the original 2 years ago. But today, my friends, for the first time in a long time, Rambus isn't down 5 points on earnings. So we're right here on the cusp of it going green. If this thing breaks 44.80, I'm going to buy more. Hopefully this damn thing can break back into the 50s, and then I'll probably sell it. And that's when you guys load up, because I've owned the stock for 2 years. The day I sell this, it goes right back to 120. But I'm watching Rambus, PayPal, McDonald's. I think we'll have plenty of action.
Kenny, one more request from the chat. They're wondering if the Love Sack company is showing one of these Andy Dufresne patterns. Ladies and gentlemen, get your heads out of the gutter. Love Sack,
baby,
creates blankets and decorative filler.
Yeah, they make
very
really
expensive
great
couches.
You could shape the sack to your own way you want to be.
Get your heads out of the gutter. It's a $500 million furniture company. Settle down, ladies.
Expensive couches. That's all.
Is that an Andy Dufresne pattern, Kenny Glick?
It is.
Look at this. Who's got the smartest chat in the business? Come on.
Very cool.
Come on.
It's got to get over right where that last peak was. Very good. And obviously my red lines represent where I've been trading the stock. I'm kind of familiar with Love Sack, but I am married, so I'm really not that familiar with it. What?
Love Sack,
baby. Exactly. So yeah, looks good. Looks good. I guess the earnings are coming out. So it's not a very highly traded name, but yeah, it looks like it's going to come out of that bottom range.
Look at this Love Sack making new multi-year highs, and they tell me the consumer's dead and can't afford anything.
They are expensive. All right, thanks a lot, Kenny.
Kenny, you're the man.
I'll see you guys in the
Kenny,
room.
drop the link there, Mr. Spencer.
Yep, if you missed it, it was on the screen. Hit thebid.com. Join Kenny's room. Trades live there every single day. All right, let us bring on Mr. Ari Wald.
Do it. Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Mr. Ari Wald, the fan favorite. Welcome back, sir.
Hey, JC, what's going on? I love that hype music you guys have. That's a great intro song. I got to get that on my, when I'm working out there.
We got to get Ari on the intro.
Yeah, that too.
We got to get, featured guest, regular guest. We got a lot to cover here, Mr. Ari Wald. We don't have a lot of time. We know you're a busy man, Mr. Ari Wald, chief market technician at Oppenheimer. They still let you call yourself that, or are you CEO of Oppenheimer yet?
No, and I'm specific technical strategist. None of that macro stuff there. Technical analysis is the key.
Technical strategist, the future CEO of Oppenheimer here, ladies and gentlemen.
Yeah.
Ari Wald, I ask this question regularly, and I'm not getting a good answer. Hopefully you have one. You've got the S&P 500 within a nose hair of all-time highs, NASDAQ 100, Dow, the whole thing, ACWI, EFA. I mean, right? Every bull market. You got the volatility index of the S&P 500 above 20. And when you look at the American Association of Individual Investors, which, as we know, can be somewhat erratic and emotional. However, fewest number of bulls since May. Volatility index above 20. Stock market makes all-time highs practically every week. What are people so scared about?
Why is the VIX high despite this bull market action is what you're...
Where are the bulls? Why is the VIX high? Just not seeing the optimism that one would expect to see when the stock market makes all-time highs every week. Am I wrong?
Well, yeah, you're not seeing it in the VIX. I would say that's more of a concern. I would say that a lot of the sentiment polls are on the more optimistic side. Our own OPCO bullish composites, an aggregate of four of the popular surveys, Investors Intelligence being one of our favorites in that poll, is back towards the optimistic end of its range that had been in even over the last decade, kind of closer to those levels where it peaked out in March and June, July. From our perspective, sentiment from a contrarian basis is a headwind to the markets. And if you look at the VIX, I want to see low levels. I would say the higher VIX levels is almost somewhat concerning as well. That low VIX readings consistent with bull market action we found is actually, which describes current conditions, when the VIX is rising in a rising market tape, It's a smaller sample size, but that has coincided with more bearish underlying action. Now that's only one piece of the puzzle, and I do agree that there's this that possible concern that yellow light is being balanced by market positives elsewhere, market breadth being the most notable piece to that. So, but it's not, as if you look at the evidence, perhaps not as uniformly bullish as it's been in the first 2 years. And I think that makes sense. We're pushing now into the third year of this bull market. So, we're getting closer to those thresholds that would be consistent with a full cycle. I don't think we're on borrowed time just yet. I think the cycle does continue into 2025. But looking out into 2025, I want to be open to, some warnings that would suggest a market top could be forming.
100%. We went back and we looked and see how many times the VIX was up here with the S&P 500 making new all-time highs. I figured it wasn't that often. It's actually happened 47 times. So it happens it happens a lot, as it turns out. So this is not, totally unprecedented. We looked at the forward returns, not really much information there, which I was actually a little bit surprised about.
Well, I'm curious about that. So 47 separate occurrences, trying to stripping out not the repeating.
Where the S&P 500 closed the week at an all-time high, and the VIX was higher than where it is now 47 times or 46 times. This was the 47th highest VIX of all time, with a weekly close at all-time highs for the S&P.
Were those signals bunched together or kind of 47 separate?
Yeah.
Separate. No, because I just recall late 90s is what comes to my mind as I think of a rising market and higher VIX readings. But that there are positive scenarios that balance out, obviously, what was that negative for what you're saying.
We ran it,
and all the numbers. Not much information.
The changes in forward returns relative to regular returns, there wasn't much there. Like it was, which was, again, it was surprising to me running the data, which is why we run the data. It was surprising to me how many times that's occurred in the past. And also surprising as how little information we got from that. Yeah.
And my take on the VIX and how we use it is there's an asymmetric payoff from it. You can buy, as a contrarian signal, you can buy stocks when you get these VIX spikes. You can't sell stocks necessarily when the VIX is low. It's the middle that is worrisome, kind of when you're in that 20 to 30 range, where we've seen these bear markets unfold, and the VIX kind of oscillates between that, where you want to sell stocks at VIX 20 and buy them at VIX 30. And so let's see where we are. We're at about VIX 20 right here with a high market.
When it comes to looking for signs of, changes in trend and, a change in the environment, we're in year 3 of a bull market. If the bull market were to end now, it would be below average returns. Historically for bull markets, it would be shorter in duration than the average bull market. But it could happen. But the probabilities, I would argue, are probably against you based on that alone. So I agree wholeheartedly to keep an open mind to changes in the environments. This is what we do every day. We think about the types of things one would expect to see in changes in these tides, right? But I'll open it up to you. Give me like a top 3 list of items that you would expect to see ahead of a major change in market trends.
Sure. Well, and that's a great way to think about it. The roadmap in terms of these bull market cycles, that kind of frames our outlook, thinking in terms of what has historically been about a 4-year equity cycle. The bull market cycles, the median duration about 30, 32 months, let's call it 2.5 years. The appreciation median about 70%. So kind of all along, we've been saying fair value for this bull cycle would be about S&P 6,000 through the first half of 2025. We're getting pretty close. Technically not there. I guess you could still call it below average, but close enough where if it were to top right here, right now, I would say that would be consistent with what a full cycle would look like. We don't expect it to top right now because the signals are still confirming a roadmap that should continue. So to your question, what would we be looking for? First thing we're looking at is market breadth. Love watching the percentage of stocks of trading above their 200-day average. We look at it
Which stocks in particular?
We like to look at the NYSE. We have the most history on that benchmark, and I think it's important to look at an index that's capturing all capitalizations.
And sticking with that, leaning in on that quickly. When you talk about how you're choosing the New York Stock Exchange because of the history that it's got, valid. Would you also not argue that it is also a better look at the stock market because of all the international exposure, the cyclical exposure, versus something like the S&P 500 or the NASDAQ 100 or the Dow? Is there an element of diversification in that universe also?
You got the ADRs in there as well. And to my point, you have the capitalizations. You want to look at something that's capturing large, mid, and small.
Yeah.
You know, Russell 3000, I wish I had data on that as far back as I do for the NYSE, because the point being, later in a bull market cycle, you're going to see breakdowns at lower capitalizations that gets masked by still ongoing strength in larger caps. And that's the typical dynamic. So that's those divergences and narrowing breadth is what you're looking for. And we found 60% in particular for stocks, a 200-day participation on the NYSE is an important threshold. New S&P highs undermined by a reading below 60%. It's not just about divergence, it's the level of the divergence that has corresponded with many of the market tops over the last 25 years. So as it stands, we're above 60% and still confirming an argument against the top. I'd be looking for a change in market leadership. And this has begun to creep into the markets. Specifically during that summertime Q3 rate breakdown, we saw low volatility stocks begin to take on a leadership role versus high beta stocks. Now, if you look at the individual parts, it was more driven by catch up and low volatility rather than a breakdown in high beta, which would probably be the more worrisome combination. But nonetheless, even as the market has recouped those gains, high beta hasn't recouped hasn't outperformed by the same degree. That relative ratio is still below the 200-day average in favor of low volatility. So that is a yellow light creeping in to the market that we got to be mindful of. A little bit of additional nuance to that, perhaps not as worrisome as what we're seeing on the surface. We did a study looking at returns in the third year of a bull market at the sector level. And what we found is that utilities and healthcare have outperformed more than any other sector, going back to the 1930s in the third year of a cycle. Yeah, and we specifically look at the cycles that were still intact at the 2-year mark. We stripped out all the shorter ones. And then we broke it down further. And what we found, we broke it down by whether the cycle topped in the third year or whether it continued beyond the third year. And when utilities outperformed in the third year, that captured more of the cycles that actually lasted beyond the third year. It was when healthcare outperformed in the third year, it was more often to see a market top. So the fact, as far as what we're currently seeing, utilities outperforming healthcare, based on that study, would argue that this is consistent with a third-year bull market that should continue. And looking
at healthcare relative to the S&Ps, I mean, just a complete disaster. You're saying that is a positive for the overall market. I'm looking at the lowest levels in over a decade for healthcare relative to S&Ps.
Right. And what's interesting, absolute and relative here too. It looks awful on a relative basis, which we are saying is would argue against the market top scenario, that if healthcare was outperforming, we've seen more market tops when that has occurred. But what's interesting, in absolute price terms, the sector's holding in there. And this is kind of the idea that even lagging sectors are rallying, which speaks to the broadness of the rally, which is a positive. And the final, you asked for 3 signals. The final one would be interest rates as well. You know, to us, high and falling is bad. That's the market pricing in more imminent recessionary risk. So the fact that we had this little bit of a tick higher in rates, I see that as a positive. I see that as intermarket stability. Could be arguing for a later cycle, but not end of cycle scenario there. So those would be three signals I'm going to be watching for in 2025.
So you
far,
don't
some
think,
yellow lights, but more positives than not.
so you don't think the fact that interest rates have gone straight up since the Fed started lowering interest rates, which I find hilarious. I know there's duration changes, but it is funny when you say it out loud, right? Rates have gone straight up since the Fed started lowering rates. Too good. You are saying you would take that more as a constructive market behavior versus the Fed is clueless, they don't know what they're doing, and the world's about to fall apart.
Right, because you're right. The Fed's controlling short rates, but it's really the long end, which is going to be has risen, which is going to have more economic growth scenarios priced into that. So that I'd be more worrisome about a breakdown in interest rates. That would suggest more economic concern here, which we're not seeing. So yeah, it's kind of been more oscillations. They have. It's been kind of straight down then straight up, but still kind of oscillations around a flat 200-day average. And I know what you say about a flat 200-day average. That is consistent with a more range-bound market. And
the market just loves it when rates aren't doing anything. They're not going up. They're not going down. They're just steady, right? Is that right?
All about intermarket stability, whether it's interest rates, currencies, commodities. You don't want them too high. You don't want them too low. Equity markets like that stability. And I think that's exactly what we have.
Now, let me ask you this. So you're looking at the percentage of stocks on the New York Stock Exchange above their 200-day moving average. You're looking for that 60% level. We dipped below that 60% a couple of months back and quickly bounced back. Now, how do you think about that when you see like a whipsaw like that? And you don't, now granted, especially you, are not one to just make all of your decision based on one indicator. You're a very weight of the evidence kind of guy, and I respect that. But just specifically this one data point that, I agree, if we were to break down, that would be evidence of deterioration in breadth rather than the improvement that we've been seeing over the last couple of years. How do you think about those whipsaws, that one in particular, maybe a future one?
Right. Well, I think that, and that's a great way how we think about it. And it's not so kind of black and white, of course, but and then another way is that it was on a market correction. If the market's going to go, move down, yeah, we're going to expect credit spreads to widen. We're going to expect market breadth to tick lower. We're going to expect more defensive leadership. It's what happens on the move back to the upside. And so it was less so moving below 60% on a setback. It's if you stay below 60% on the recovery, if it's going to be a very narrowly driven recovery. So it's more new S&P highs undermined by a reading below 60%. So it was on a market setback. I'm fine moving below 60%.
Got it.
But we moved back above it as the market recovered too.
So you're more interested in the divergence itself versus the absolute number. That makes a lot of sense.
That's it.
No, I love that, Ari. See why we bring in Ari Wald, right? We're all learning things. I love it. The high beta, low volatility. Something you and I have looked at. I mean, we're always talking about it. I feel like you and me might be the only ones talking about it. I think it's like 70% of high beta is just tech and discretionary, which is further reason why looking at high beta on a relative basis is consistent with strong bull markets. Like, think about the types of names that are driving that. Also, just within a range over the last several years, hasn't been able, the ratio between S&P high beta versus S&P low volatility has not broken out above those prior cycles highs yet. Neither has Amazon, neither has Bitcoin. Quite a few are still working on that. Very important ones. You wouldn't put this ratio in the same category as a Bitcoin or an Amazon. And then when you look at an Apple or a Meta, or Nvidia, they have already exceeded those prior cycles highs. Do you look at those others as setting the precedent for a Bitcoin, for an Amazon, for a high beta, low vol ratio to exceed those highs? Or are you treating it on its own? How do you think about that?
trying to understand your question in
I
relation.
bring the hard questions,
point.
Ari. This isn't basic cable television.
Well,
I'm bringing in the heat.
Is the question you're asking just the inconsistencies where some markets and stocks that you would expect to be consistent with risk on behavior, some are working, some aren't, and how does that relate into with the high
Just
beta
when you look at the behavior of that market that peaked at the end of 21. So the ratio between high beta and low vol peaked at the end of 21 with Amazon, with Bitcoin, with these other stocks.
Okay.
Many of which have already exceeded those prior highs. Amazon has not, right? For example, Bitcoin has not.
Again,
high beta, low vol has not.
Right. Let's cut apples and, make sure we're looking at Amazon. Absolute and relative has been weak, but yeah, we're talking about a relative ratio, and now you're talking about these prices.
But they look the same. They look similar.
Right. And so right off the bat, high beta, low volatility. That's one of my favorite leadership ratios. It captures offense versus defense. I just as a leadership signal, I think it's better than growth versus value. I think it's better than large versus small, because those other ones, sometimes growth leads in the upside, sometimes value does, sometimes big, sometimes small. Generally, you want high beta to outperform in a rising market, and when low volatility outperforms, it's indicating that leadership is changing. So this is, let me start with that, and maybe you can add on to the question. That is what I'm concerned about. That's kind of was the breakdown over the summer. There was a point where it looked like we were finally going to get this beta breakout above that 21 peak. Then that late July, early August rate rollover occurred, and we had this shift in leadership with low volatility capturing this big bid. And even as it looks now, that ratio is still below the 200-day average. So that's the leadership of the market beginning to change, perhaps consistent with this maturing bull market cycle. So that's my take on leadership. And then, from there, Bitcoin starting to break out. It was looking dicey for a little bit there. I guess you're, perhaps as an indication that there is still some risk-taking behavior out there. That would be a positive.
Well, it's the eighth member of the Mag 8, is it not?
Perhaps I dig that. That makes sense. And I think even thinking about the Mag 7, Mag 8, there's the pieces are doing something different. And I kind of always bring this up. You notice how the acronym has changed through the years. It was FANG, then we added an A to it, then it was FAGMA, now it's Mag 7. The reason we've done that is because there's rotation even in those high names. So as much as now Amazon hasn't been exceptionally strong, something else has been. NVIDIA remains strong. And as Tesla had been weak, now Tesla's picking up some slack. And, now Microsoft's, been more lethargic. And there's rotation even at that very high level, which I think is fine. I think they could take turns working higher. Generally speaking, though, large cap growth is still a secular theme that I think continues to drive this bull market over the coming years.
Throw up slide 2 there, please, Mr. Spencer Israel.
Are there slides we should be looking at? I keep on missing. Oh, there we go. Okay. Now I got slides. Now I see them.
That's
it. Yeah,
I could be making this up, Ari. But so the strength in Bitcoin, the strength above those highs in Apple, the strength above those highs in NVIDIA would suggest to me, as somebody who is weighing all of the evidence, that new highs in those is setting the precedent for high beta to begin to outperform low volatility and resolve this multi-year base higher like the others. You think that's the wrong way to look at it? Sounds like you're not digging, you're not picking up what I'm putting down here, are you?
Here's where the difference is. I'm using this as a market signal. You're trying to predict this.
No.
I'm just saying.
No.
I'm
using it as a market signal too.
Now. I'm saying I'm not trying to predict that. I'm saying if high beta begins to outperform, that'd be pretty bullish for the market.
But wouldn't these set the precedent for high beta to be outperforming if these things are all breaking out one by one and they look exactly the same? No prediction, just weighing evidence here.
Well, let's start there. I guess Bitcoin hasn't quite had that definitive breakout just yet. Amazon hasn't had that definitive breakout just yet. So maybe let's wait for those leading ones to do it first, and then we could see if high beta does. But
that all
paints the picture.
I know, but Ari, But those don't seem to be leading. They seem to be more coincident. The leaders are the Nvidia, the Apple, those others. Those are the leaders. These are coincident.
I think that makes sense. And I think that's the point of technical analysis is really at the end of it, we want to identify what's working, identify what's kind of maybe in position to work. Let's keep an eye on it, and what isn't working. And so we know what is working. That's what you want to own. We know what's in position to maybe start to break higher. Let's keep an eye on these. And we know what we don't want to own in this cycle as well. To your, I don't know. Are we in agreement, and maybe I'm missing some nuance?
I feel like we agree way too much generally. So I'm trying to find something we might disagree on, but I don't think we're disagreeing. I think we're saying the same shit. So hey, listen. If me and Ari are always agreeing, I might be doing something
I think
right.
when it comes to this, sometimes when there isn't something to have a view on, I just don't have a view. Like I've become so comfortable in knowing where I should have a strong view and knowing where I shouldn't. And I just really just continue like, all right, if these aren't the leaders, to you said, if these are more coincident, I might be using them as a market signal. I'll be keeping an eye on them, but as far as where I want to be exposed to its relative strength, I am a momentum investor. I embrace it. I love it. I like relative strength, and I want to be in those names that are already breaking higher to the upside.
We love that about you, Ari. You're talking our book here. Last question. I know you're talking to a lot of institutions, a lot of buy-side guys. We got an election 1 week from today. How do you think about it? Are you thinking about it at all? Like, what are you telling the people that are asking you these questions?
It's funny. They wanted me to do these presentations based on like the presidential outcome. I'm like, I could probably talk for 5 minutes on this. Like, I can't do an entire. I could do my market outlook, and I'll provide my one slide how markets usually do based on who wins or around these cycles. But I tend to say that the presidential policy can magnify and dampen cycles. At the end of the day, Fed policy is going to be much more important. And we do talk about presidential cycles as much as we do because it has historically overlapped with what has been this 4-year cycle in the equity market. And you'd had these major market lows every 4 years, almost always in a midterm year. And we had been off cycle for a number of years. Sure enough, we got back on cycle in 2022, had major market bottom in that midterm year. And so now we're kind of following that script again. And so I do want to be conscious of the fact that post-election years, specifically in the second half, tend to soften a bit. So we're not into that window just yet, but that's very simplistically, again, just kind of thinking in terms of that possible roadmap, knowing we're pushing into the third year of a bull cycle, knowing it's a post-election year, how do my indicators shape up going into that roadmap, going into those potential headwinds, more so the second half of the year. And so that's how I'm thinking about it. There could be some market gyrations, near-term fluctuations around that election next week. And we're going to be watching how the market reacts to that and interpreting that in terms of our forward outlook.
So the answer is going in, kind of looking for some added volatility and some gyrations in the market around those days, but then taking that information and moving forward rather than looking for something more specific. Do I have that right?
Yeah, knowing the market's pretty well positioned going into it. I mean, I guess there is a little bit of softness. There's some trading divergences. The daily RSI didn't make it above 70. So there could be some downside.
What, the S&P?
On the S&P 14-day RSI. So being open and understanding bull markets don't go in a straight line, but kind of on a more intermediate term basis, just understanding and how we're reading the tape that the market is behaving in a manner consistent with a cycle that should continue to the upside. That if there is some downside volatility, I want to be ready to buy it. I want to be preparing my buy list, buying those high momentum names, buying capital market stocks that have been absolutely on fire, across the board, albeit a bit near term overbought. But if we do get that market setback, be ready to buy names like that. Be ready to buy some industrial names, some technology names. And so, for us, it's about being positioned and rather not knowing I'm not going to get every kind of ebb and flow of the market right in a bull market. especially.
I hate to end this on agreeing, but again, S&P not getting overbought. Same thing with the Qs and the Dow. That has been front and center for me. So I'm glad you brought that up. If you ask me what is the most bearish thing happening out there, that would be my answer. Whether it's bearish or not, it's at least something to monitor, right?
For sure. That's RSI is a measurement of the speed of price. So it indicates that the rally has decelerated since July. And as we know, that is typically could be a reversal signal. With that said, the market is still respecting even its closest support levels. So not, some divergences are more worrisome than others. I don't think this is especially worrisome, but again, could be setting up for a little bit of a near-term setback, but I don't think it's much more than that as it stands.
And if we are to get overbought on any additional rallies, well, then you throw that out the window.
And that's a good thing. And right, that term overbought gets thrown around a lot. That just means the market's accelerating. That's a good thing. You would expect to see that in a bull market there.
GC, but I can't buy it because it's overbought. Sir, how can an overwhelming amount of buying pressure possibly be a bad thing?
Because we're calling it overbought and it sounds bad.
That's right. That's right. Ladies and gentlemen, Mr. Ari Wald.
Someone on TV, yeah.
Make sure to follow him on Twitter. If you see him on the interwebs, you'll find him on a podcast every now and then. He's somewhat elusive, Mr. Ari Wald, but he comes on our show, and we appreciate you for him, my man.
That's right. I appreciate it. We'll see you next time. Take care.
Adios. I must say, we are incredibly fortunate that Ari comes on our show. He doesn't, he doesn't do a lot of media. I feel like he used to do more. I feel like he used to be on TV more, maybe. Very, it's hard to get, Ari. Hard to get. You can't get him in the city. He's coaching way too many baseball teams these days, so he's rarely in the city. Good for him. Listen, there's a time and a place for everything, right?
Yes, that's correct.
All right, Spencer Israel, what do we got? Chief YOLO officer is in the process of YOLOing as we speak.
Yeah, we got some earnings.
The YOLOs are really hitting hard right now, he says.
Can we look at the McDonald's? Wow.
Yeah, what do you got?
How things change in 2 hours or 3 hours. 3 hours ago, my Twitter was blowing up about McDonald's. Oh no, the same store sales or global sales was the biggest drop in 4 years. Disaster. Apparently not, because the stock is reversed. It was down as much as what? Like 8% this morning. It's now in the green. So it just reversed. So really in the last hour, what would you say? Hour and a half there? Hour and a half. Listen, 8 o'clock. Now up at 4% on the day. Is that what that is? So, or no, 1%. Sorry. But yeah, the earnings were very mixed. The reaction kind of says it all. So the global sales, like I said, declined. And it was the biggest drop in 4 years. But the other numbers came in above estimates. And their rate of same store sales their same store sales had been declining, and they quelled that decline. So look, it seems okay. I mean, to me, the biggest thing here is that red circle on the chart, right? That big gap, that E. coli gap, right? That's what we're calling that. So
that red circle is what makes me want it. I love to see that. It's exploring a little bit of downside. And if you get a nice hook higher here on bad news, they just came out and said literally E. coli is going to have zero impact.
For the record, I love what you just said there. It's exploring a little bit of downside. I like that, Strazza. That sounds great. Yeah.
Because when you get these little shakeouts or whipsaws, all it is it lets the bulls see what the bears got. Basically, think of this as we gave the bears a shot. They couldn't do it. That should make a bull like it even more.
Yeah. I really like that form of resistance there. I'm going to hop off, guys. I got to do my YOLOing now. Try not to get us canceled, Spencer. Adios.
This is a great lesson in letting things dance. If you're like me and you're on Twitter at 6 in the morning or 6:30 in the morning, maybe check back in 3 hours and then check back in 5 hours after that, right? Or 24 hours after that, because the sentiment at 6:30 in the morning can change wildly by the time the market actually opens for real at 9:30, and it can change even
Well,
more.
it's changing wildly right now. I mean, these things take a while to shake out and settle. The call is probably still on. We're looking through it right now. It seems fine, but now you're selling back down below 300. If we hook higher, back above 300, volatility is getting crushed right now in these call options. I'm probably going to get involved. Little trade here. I'll probably get involved. I support McDonald's.
All right.
E. coli or not, you know.
PayPal down 7% this morning on their report.
They priced too much of it in, I think. You know, PayPal's been doing really, really well since the summer. PayPal at yesterday's close is up
a great run. Yeah.
44%. So, yeah, you know, always think of like where are they coming from? This is nothing to be too concerned about at all with PayPal. And then SoFi, right? SoFi's report was a banger. This is a real company. I really like what SoFi's got going on here. You like this, Spencer? This is your bank, right?
Yeah. I want to. I'm trying to change my chart setting.
Oh, Pat wants to come on. You want to bring Pat on? He's got.
Oh, sure. Yeah. Let's bring Pat on and see what he has to say about this. Yo.
Yo.
I just got your text, and that was funny.
You want to share the class?
So,
yeah, do that. So, what's up, brother?
Man, it's hard to keep up with all these earnings. I feel like every 2 seconds, a different position's just, they reported today.
Yeah, you know, it's hard for me to keep track, and what I end up doing is I have like remaining call positions on, and like right now, like SoFi. I was just busy yesterday afternoon. If I knew that they had earnings today, I probably would have sold some stuff. I'll probably have calls that were worth something be worth nothing. But hey, this is the game we play. It's just the game we play.
It is.
Speaking of call options, Pat, you getting involved? You doing anything risky out here?
Oh man. Well, I heard you guys talking about the McDonald's. It's really just a battle at that 300 level. I mean, if you're into like selling puts, I think this is a good scenario where you do that.
I don't hate that. I don't hate that
as
at
long
all.
as you're okay with owning McDonald's. I mean, like you said, I mean, it's a staples. Do we really think this company's not going to be here in 5 years? Probably not. I mean, it definitely will be.
This is one of those stocks. I don't think you could own enough of it. If you're like a conservative long-term investor, this is exactly what you want in your portfolio.
Yeah, and I think that everyone compares it to Chipotle, right? In 2015, they had that 70% drawdown. I think it was over 2 years. But they're coming from two different scenarios. Chipotle had ran for several years. It had done great before that news. It was begging for any sort of catalyst, any sort of negative catalyst to break that thing down. This thing is the exact opposite scenario where it hasn't gone anywhere in 2 years.
Yep.
And it finally cleared that resistance level in September. So 2 months ago. And here we're just retesting it. So, you know, that was a really important level. We tried to crack it for like a year and couldn't do it. So it makes sense that we're you know, it's starting to act as support here.
And I mean, this is just a different story, right, than something like Chipotle. This is a very mature business. Chipotle, I think, still has like a pretty crazy valuation. Let me just double check. So Chipotle's valuation is 58 times the price to earnings multiple. McDonald's, on the other hand, probably much closer to a market multiple, I would imagine.
Was I talking to you? The take on McDonald's? It's a real estate company, basically.
Yeah, that's always been the take. Yeah.
Yep, and I think it's a correct take, proper take. So McDonald's, like I said, price to earnings, they have a market multiple 25 times. So you're paying twice as much for every dollar of Chipotle's earnings. McDonald's also pay you 2.5% dividend yield. Talk about a safe dividend too.
JC says, watch the movie The Founder and
and
you'll see why it's a real estate company.
Yeah, they snatched everything up. And about 25, 30 years ago, they went through a big transition where they wanted less company-owned franchises, right? They wanted to go more to a franchising model. All of these fast food joints have a mix, right? And they tend to, for different reasons, come out on different sides of that spectrum. In terms of, say you have 100 locations, how many of those do you own? How many does McDonald's own? And how many do they franchise out? The economics obviously different, right? So McDonald's used to own way too many of their restaurants. Then they said, we just like owning the real estate more than anything. Let's franchise a lot more of these out. That happened, I think, late 90s, early 2000s, and it was definitely the right move. Greatest American brand in the history of the United States.
Well, you were talking about that. You were like, well, what are some other ones, right? I mean, is there anything better than McDonald's? And what did we come up with? We came up with Coca-Cola.
Yeah, we said Coke and McDonald's. That was it.
Coke, Nike, Disney, honorable mentions.
Oh, Disney gets honorable mention. Yeah, true. Wait, DJT got halted? Oh my goodness.
It's on, baby. It is so on. Pat, has the market elected the next president? Are you seeing that? Or no? Stanley Druckenmiller,
right? What do you think's going on with this DJT, Steve?
I don't think about it. I literally.
Is it a vehicle to bet on Trump's odds right now, or is there anything actually real and material? Do you think it'll actually stick if he does get elected?
This is one of the stupidest things.
What is the float? What is DJT's float?
I wouldn't touch this.
Millions, 10% short interest, so not nothing.
Listen, you could do
I don't know.
far less stupid things to try to make an election bet right now. Far less stupid than DJT. I think like I put on the Coinbase risk reversal yesterday. I bought a ton of Bitcoin miners, like short dated calls. That to me is an election trade, right? I'm not just betting on this range resolution in Bitcoin and the other cryptos, but I think there could be a significant, quick election tailwind, and momentum move, and I want to be in calls. So I think you could buy the regional banks. I think you could fade something like TAN. TAN couldn't give you a better level. Look at these solar energy stocks. If you want to short them and make that an election trade, you couldn't ask for a cleaner level, right, Pat?
Yeah.
So like I think there's a ton of
they've
stuff
already been beaten
without venturing to buying a multi-billion-dollar company that really is not even a company, right? No offense to the DJT media thing, but is it even real? Remember when their numbers came out last quarter?
Yeah, I think technically it's real, but it's real in the sense that it's
an idea that got smacked.
Like Lucid Motors was making cars, right? It's like that.
So markets are efficient. DJT example 1 million.
You know who's not having a good day? Or at least they weren't last I checked. Was DR Horton.
So is this finally
actually the home builders last week? This was like one of the most bearish things I'd say from last week. ITB worst weeks in over 2 years.
What?
Wow.
Yeah.
Wow.
So it's the worst week since the low.
Yeah.
In ITB.
They all look terrible. We used to look at these stocks and say that's definitely not going to be a top, but I could draw some tops out here right now. Definitely shorter term than what we had earlier in the year. Right, Q2 there were some sweet non-tops in the home builders. If you look at something like Homes right now, if you look at TriPoint Homes, if you look at Lennar, you could draw a little top there, a little diagonal line. I could,
Might be time for me to take some profits in my home builders.
I'm long the Pulte, and that's it. I think Tesla is like the screaming buy within discretionary right now. Tesla and Amazon. I think you just own XLY here. You want Tesla, you want Amazon, you want Home Depot. Look at all those charts. Those are all charts that are like right on the cusp of some sweet breakouts. Like Home Depot definitely has some work to do. Tesla's a couple points away. We'll call that a breakout. And Amazon's right there with earnings coming up in a day and a half here.
It's amazing how fast that Tesla chart shaped up. I mean, I remember last week looking at the chart being like, this thing looks like crap. And now it's like, whoa.
Throw up slide 2. Listen, I was talking to the analyst team guys yesterday. I said, we need like an Elon index. People hate everything Elon is working. like the dog coins, his cryptos are mooning, the Tesla's going. Look at the closest comps you have for SpaceX, something like Rocket Labs or ASTS. Do you see what those stocks are doing?
Speaking of SpaceX, how's that DXYZ doing? Remember that close end? Oh yeah, not good. Never mind.
But that actually owns SpaceX. Do I have that right?
Yeah, it's a closed end fund. It owns lots of things. The largest weighting is SpaceX.
Should I do my rant on these closed end situations?
No, we've heard it before. It's okay.
Don't buy this. It's not real.
Yeah. General rule of thumb, any sort of private equity vehicle in the public markets is not going to work.
If they're telling you you can get access to something that you can't get access to, don't trust it.
Yeah.
Crazy. Don't buy the IEP or Bill Ackman's bullshit either. It's all fugazi.
What else? Pat, anything else on your mind?
I'm just looking at this Candle and Kinsica Pharmaceuticals, that KNSA. It's wild.
What the hell is that?
Speaking of this Icon Enterprises piece of garbage, down 15% here today.
IEP.
Man,
yeah.
What a disaster this thing is. What's Ackman's? Spackman Equities Group? Is that him? Spackman?
I think it's PSH.
No. That's funny.
No.
Now, what's his thing called? What's Ackman's fund called?
It's Pershing Square. I don't remember what the
PSHZF.
PSHZF, is that it?
PSHZF. He's doing better than Uncle Carl with this thing. But these are all crap. Buy one of these private equity companies. Buy a Blackstone, buy a KKR. Go there. Don't go here. All right. So.
All right. Should we? We've all got things to do. Should we do some recess and get out of here?
I have so many calls that are expiring in like 3.5 days.
Oh God. Okay. Let's do some recess. I'll just apologize for being low energy this morning. I'm not in the best mood. I'm feeling pretty beaten down.
You've been fasting
by the Yankees, and I don't even know if I should be glad, but I'm going to the game tonight, so I have to now basically invest my entire Tuesday noon/evening/ early morning Wednesday into this experience, and it might not even pay. It's probably not going to pay off for me.
I get the feeling, Spencer, but that's the only way you can do something like that. You got to take the chance. You got to get the tickets ahead of time. I hear you.
I'm going. I've never been to the World Series before. I'm going to the game. I hope we win, but I'm I'm almost not even looking forward to it. You know what I mean? It's almost like I'm not going to not go. I've got the tickets, but I'm not. My excitement is just. I'm trying, guys, but
I know. Try to get that energy up.
Hey, at least the bar's low. You might surprise yourself.
Is this the bottom, Josh? I certainly hope so. But I'm up till midnight last night watching something with no emotional payoff whatsoever, and now I'm tired because I don't.
Giants? Are you talking about the Giants game? Because that would.
No, but I don't stay up till midnight ever. I go to bed at like 10 o'clock at night. So.
The game was on that late. The baseball game last.
Yeah, they've been going to like midnight, dude. Like every night, and it's just irritating. I'm like annoyed at life today. So I apologize for my low energy, everyone.
So some sporting events are like this. In college basketball, I know this because my alma mater, they win a lot of national championships. So when you get tickets to the national championship, it's a package deal. You have to buy the whole Final Four. So you get the semifinals, and then you get the finals with it. That's how they sell the tickets. So say that you were making plans to go watch your team in the Final Four. You have to pay for the championship tickets. It's a package deal. So if you lose in the semifinals, you then paid for a championship game that you're pissed off and don't want to go to.
I'm sure by the time I get there, I'll be in a better mood. I'll be excited, but the energy is low this morning. I'm fighting it. I'm fighting it hard.
So join us on Spaces at 11. We're going to be really high energy. I think we'll lift you up.
Oh, I could use a lift up, honestly. Emotionally, caffeinatedly. I need some coffee.
Coffee.
We got
Yeah.
some special guests coming on Spaces today. It's really going to be a banger.
All right. I'll
Do
stop.
we, Steve?
Wear your bull market shirts.
You have
Pat,
some,
get your bull market.
some news for
Why you
me.
dress, Pat? Why you dressed like Steve Jobs? Get your crypto bull market shirt on. What the hell is
I'll go
this?
get my bull market shirt on. Sorry.
God.
All right.
Are we done here? Let's go. Mara's mooning. Come on. You see these
All
big
right. Well, let's go. Everyone smash the like. Thanks to Ari Wald for hanging out. We'll see you on
Dude.
Spaces. Here, let me drop the link in the chat. It's good. It's going to be on the Chart Report Twitter Spaces as we do every Tuesday. So there it is. We'll see you guys there, I guess, in like an hour. All right. Adios.
Sounds good.
We are crushing these YOLOs right now. This should be illegal to make this much money.
Later.
I can't take no loss. I don't even know what it costs.